April was a new month for me. I took a break from looking at my portfolio every day, and also I took a break from looking at the markets in general. I made some big changes to the portfolio. I sold out of 3 positions, and I actually moved £2,800 to a new investing platform. I received dividends from 3 companies, and my portfolio is now sitting at £15,200. In this video, I'm going to show you the dividend income I received in April. I'm going to give you an update on my portfolio, and I'm also going to give you an update on my investing plan going forward. Let's get into the video. So as usual, let's take a look at the performance of the major markets. In April, the S&P 500 was down 4%, which is the worst performance in the market since September 2022. I think this boils down to interest rates, with strong economic data coming out in April and with sticky inflation. It gave the outlook that the Fed won't be cutting rates as soon as was previously expected. Therefore, the markets took a little hit. I don't think the outlook will continue in this way, but it was a bit of a sense check for the US as the S&P 500 hit an all-time high in March. The FTSE 100, on the other hand, was up 2.6% in April, which is kind of odd, seeing as we have the same outlook as the US, sticky inflation being the main thought. But I believe earlier in the year, the S&P 500 had actually priced in rate cuts, whereas the UK had not. And now we're expecting 2 to 3 rate cuts in 2024. It is also expected that the UK could be the first to cut rates, as we've actually had quite good inflation data in the last month. I don't really expect the FTSE 100 to outperform the S&P 500 in 2024, but if the Bank of England cuts rates earlier than we expect, we could actually see some really good growth in the UK. Let's move on to the dividend income I received this month. The first dividend I received was from Pepsi on the 1st of April, and Pepsi actually went up 2% in April. The stock dropped in line with the markets throughout April, but actually after their earnings report, the stock went up. They beat their earnings estimates, showing the resilience of the non-alcoholic beverages industry. This was mainly due to international sales, as their US market didn't actually perform that well. I think this is due to cost pressures bringing down the demand, but they gave a guidance of 8% revenue growth for their global market for the full year. Pepsi's dividend yield sits at around 3%, and they have about a 6 to 8% dividend growth every single year. They pay quarterly dividends, and with my 8 shares that I hold in Pepsi, they paid me £6.97 in April. My next dividend was from GSK. Now GSK has done really well in 2024, up 17%, but it was actually flat in April. My position in GSK is up 26%, with most of the gains coming from this year. GSK's dividend yield is currently sitting at about 3.4%, and this has been coming down recently due to their good performance. I do think it's good to note that GSK has quite a volatile dividend due to the nature of the sector that it's in, but as of late, it's actually been paying quite a consistent dividend. GSK is one of my bigger holdings in the portfolio, sitting at about 11%, which has been coming down as I haven't actually bought any more GSK since February last year. From the 75 shares that I hold in GSK, I was paid £12 in dividends on the 11th of April, bringing my total for the month to £18.97. The final dividend I received was on the 15th of April from Realty Income. Now, Realty Income is a monthly dividend payer, so we'll be seeing this every single month. Realty Income is an American real estate investment trust that invests in commercial real estate and has tenants such as B&Q and Tesco here in the UK, and some other big names in the US. The price is currently sitting at $55, and the stock hasn't really done that well in recent months, mainly due to interest rate fears. The stock price has been up and down for the last 6 to 12 months following the consensus on interest rates, because the consensus has really been changing month to month, whether they're going to be cutting or not cutting interest rates. Hopefully when inflation falls to that target of 2%, then interest rates will begin to come down and this stock will fly. I've invested around £2,000 into Realty Income and I'm down £100, which is about 5%. This is my biggest position in the portfolio by far, sitting at about 16%, and this is mainly due to me keep adding to the position while the stock is out of favour. I added £400 to the position in February, I didn't add any in March, and I didn't add any in April. The current dividend yield is currently sitting at 5.5%, and with my 43.3 shares, I received £7.61 from Realty Income this month. I received 3 dividends in April, and I made over double what I did last year, which is great to see my portfolio growing and more or less being double what I was at last April. My total dividends for the month of April was £26.58. Now let's take a look at the performance of the portfolio. So usually at this point in the video, I'd show you the investing dashboard, but as I've actually moved some of my portfolio over to a new platform, I need to update the dashboard to fit this new portfolio. But what we're going to do now is just take a look at freetrade, which is the investing platform that I use. And we're just going to go through each of the stocks and then show you the activity that I've had this month. So as you can see here, Realty Income is my biggest position, sitting at £1,900. It's down just about 5%. GSK, my second biggest position, sitting at £1,350, which is up about 30%. It is up 30% now. It's actually been on a bit of a tear in the last week or so. Microsoft, my third biggest position, around £1,340, up nearly 60%. My position in the ETF VWRL, that is £1,300, and that will be increasing quite a bit soon, up 12%. Pepsi, my next biggest position, £1,100, up 3.8%. Unilever, up 11%. Google, up 62%. SSE, up 5%. Lloyd's, up 18%. Amazon, up 67%. And Tesco, up 24%. If you're a regular watcher of my channel, you'll notice that I've actually sold out of some positions, which I mentioned earlier in the video. So now let's take a look at the activity, and I can show you what I've actually been doing this month. So you'll see here, I have my dividends from Pepsi, GSK, and Realty Income. I received a little bit of interest from the cash that I was holding in the account. And then you'll see here, I sold out of Aviva, Apple, and Disney. Now, I sold out of Aviva mainly because it was a small position and I wasn't really committed to buying anymore. And as I'm moving over to a new platform, I decided to sell out of some of my smaller positions. I sold out of Apple because the earnings was coming up and I actually had a bit of a fear that it would drop even more. My position was down about 5% and I didn't want to lose any more money considering I was thinking about selling out anyway. Unluckily for me, the stock actually went up after the earnings report, but it is what it is. I've maybe lost like a few quid there. And then Disney, which is the opposite of the Apple, I sold out again before the earnings call. I actually thought the earnings would be good, but I was just trying to clear up some stuff before I moved over to the new platform. And luckily, their earnings was bad, so I made a good call there. I think they dropped about 10% on their earnings day. And then you can see here the two withdrawals that I made, which was £1,700, which was all the cash that I had, and then the next £1,000, which was the remainder of what I had sold. So that 2.8k has actually moved over to a new platform, which I'm going to show you now. So I have chosen Trading 212. Yes, I know. I actually moved over £3,400 over to here. So that's the £2,800 plus the £600 contribution that I make every month. So going forward, I will be adding £600 to this position every single month, hopefully, barring any money mistakes from myself. And yeah, I currently haven't bought anything, but that will change. So look out for a video in the future where I'm actually buying new stocks in this Trading 212 portfolio. That is the end of the video. Thank you for watching this far into the video. If you liked the video, give it a thumbs up. Any suggestions on improvements to the video content or ideas for content going forward, please leave a comment below and I'll give you a reply. Also, you can check out the investing dashboard, which I create on a monthly basis and I send it out every single month via a newsletter. You can check that out in the description and link to my website. Now, for the people that actually watch it to the end and who might care for what I might be saying here, I'm just going to give a little bit of a life update. As you know, or people who regularly watch my videos, I actually took about 5-6 weeks off of uploading to YouTube. At the start of the year, I set myself a goal of uploading every single week, which I was doing really, really well. And then I made quite a bad video. I uploaded it and then I actually privated it. And then I uploaded another video, which is my last video, which was the portfolio update for March. And then I started a new job. So I started a new job at the beginning of March, I believe. Yeah, I started a new job at the beginning of March. And it was going well. I was still doing videos at that point. But it wasn't really what I wanted to do. And I sort of rushed into this new role. I didn't really get on with the people that were there, and I then decided to look for another job, and that sort of stress took up a lot of my time. I was spending my weekends, well, trying to look for another job. So I've actually now started a new job, and in line with this new job, now that I'm a lot happier at this new role, I'm starting YouTube again. So hopefully I'll be doing slightly better content. I'm not going to be doing weekly videos. I'm going to be planning out my videos a bit better. I might do 1 to 2 a month. I'm going to try and up I'm going to try and make the content a little bit better. Yeah. Basically it.